Picture this. You're shelling out thousands of dollars every single month for trucking insurance, right? You make the payments, you get that piece of paper, and boom, you feel safe. You think my business is protected. But what if that safety net is actually just an illusion? Well, welcome to This Explainer. Today, we're unpacking the harsh reality of why trucking insurance claims actually get denied. And we'll look at the specific, everyday mistakes that can literally destroy your trucking business in the blink of an eye. Okay, let's dive into this. Claim denied. I mean, just hearing those two words is the absolute nightmare scenario for any owner-operator or fleet owner out there. It's got to be one of the most terrifying moments you can face in this industry. And the crazy thing? Based on the data, it happens way, way more often than most truckers even realize. See, when a claim gets denied, the disasters just kind of cascade. A single operational mistake doesn't just mean, paying for a cracked bumper out of your own pocket. Oh no. It can trigger delayed payouts, massive lawsuits, total business shutdowns, and honestly, devastating personal financial loss. That shield you thought you paid for, it just vanishes, leaving you completely exposed. Part 1. Anatomy of an investigation. To figure out how to actually protect yourself, we have to look at how insurers really treat these claims. There's this massive, massive misunderstanding in the trucking world. The common myth is basically, hey, if I have insurance, I'm automatically covered. But guys, that is a total illusion. The harsh reality is that insurance policies are strict, ironclad contracts, and they are packed with a whole web of exclusions, conditions, limitations, and specific requirements. Bottom line, if you violate the terms of that contract, your claim can and will be completely denied. And this brilliantly illustrates what happens the second a major claim is filed. The insurance company puts you under an absolute microscope. They don't just glance at the police report and cut a check. No way. They investigate absolutely everything. They're looking at who was driving, exactly what cargo was in that trailer, where the truck was operating, if the driver was actually dispatched. They'll dig into your DOT maintenance records, driver qualification files, ELD logs, CDL statuses, even drug and alcohol testing. It's like a giant puzzle, and it's virtually impossible to hide operational mistakes from that level of intense scrutiny. Part 2. Driver and operational traps. Let's look at some specific, everyday traps that trip up completely well-meaning carriers. One of the most common reasons a claim gets tossed out actually involves the person sitting behind the wheel. Look, it's incredibly common for a company to let a buddy, a family member, or maybe a temporary driver take the truck for a quick run. But if that driver isn't formally listed and approved on your policy, you are playing with fire. Here's a perfect example of how what's on the policy totally clashes with what happens out on the road. Let's say an owner-operator just needs a quick break, so he lets his cousin drive the truck for a bit. The cousin knows how to drive, holds a CDL, so it seems totally fine, right? Well, actually, scratch that. It's a huge problem, because that cousin was never officially listed as an approved driver on the insurance application. So while the cousin is driving, the unthinkable happens, a major crash. And the damages? They come out to a staggering $400,000. The insurance company kicks off their investigation, puts things under that microscope we talked about, and immediately discovers the driver wasn't on the policy. The results? A massive, massive coverage dispute. A simple favor for a family member ends up totally destroying the business, all because of that one single contractual violation. And there are other critical gaps too, usually involving routing and dispatch. A lot of policies have strict operating radius limits. Say your policy only covers a 300-mile radius. If you suddenly decide, hey, I'm going to take this lucrative cross-country load, and you get into an accident way outside that approved area, that's going to trigger a denial for misrepresentation. Or think about this. A driver finishes a delivery and takes the truck off dispatch to grab a bite at a restaurant. Your primary liability probably won't cover them there. Without non-trucking liability, which a lot of folks call NTL or bobtail insurance, causing an accident while grabbing dinner off dispatch practically guarantees a denied claim. Part 3. Cargo and compliance failures. Now, what's really interesting about this slide is that it shows it's not just about who's driving or where they're going. Look at this massive disconnect between what you tell the insurer you're hauling and what you actually put in the trailer. Insurance companies price their risks strictly based on the cargo. So if you're insured for, say, general freight or dry goods, but you secretly decide to haul hazmat, high-value electronics, tobacco, or pharmaceuticals, you are creating a massive breach of contracts. To put that into perspective, consider this real-world example straight from the data. A carrier was insured strictly for dry goods, but, the rates were looking really good, so they picked up a load of expensive, undeclared electronics. Well, during that trip, a cargo theft happens. We're talking a $250,000 loss. The insurance company investigates, spots the undeclared cargo type, and instantly disputes the claim. That carrier was literally left holding the bag for $250,000. Ouch. Then we get into fraud and maintenance. And let me tell you, misrepresentation is taken incredibly seriously. Like telling your insurer you garage your trucks in rural Texas just to score a lower premium when they're actually navigating the streets of New York City every day, that is a severe violation. Once a crash happens, the truth comes out and the claim gets disputed. And on top of that, insurers expect these machines to be maintained. If an accident is caused by, say, neglected brakes and you're missing your DOT maintenance logs, your claim is in serious jeopardy. Compliance is also heavily tied to your ELD, your electronic logging device. Hours of service violations can completely derail a claim. Think about it. If a driver exceeds their legal hours, falls asleep at the wheel, and causes a wreck, that logbook violation just hands the insurance company a silver platter argument for negligence. It creates massive complications and totally opens the door to those devastating nuclear lawsuits we all hear about. So, yeah, we've talked a lot about the terrifying ways things can go completely off the rails. And the anxiety of a catastrophic denial, it's very real. But let's pivot here. How do you actually protect yourself and your livelihood before a claim ever happens? Part 4, your defensive playbook. Prevention, totally accurate paperwork, and strict alignment with your policy, these are absolutely your best and really your only ways to survive the aftermath of an accident. Let's move to and see how this builds a holistic defense strategy. Smart trucking companies basically treat these steps as their Bible. Step 1, they maintain their trucks properly. Step 2, they disclose their operations honestly. No fake garaging addresses, guys. Step 3, they actually read the policy exclusions so they know exactly what's not covered. And step 4, they keep rigorous documentation. Bills of lading, ELD data, inspection reports, you name it. Because after an accident, documentation is literally everything. Honestly, before you even sign on the dotted line for a policy, you need to interrogate your insurance agent. Seriously, grill them. Ask them directly, what exact exclusions exist? Are all my drivers covered? Is this specific cargo covered? What happens when my driver goes off dispatch? Are there any radius restrictions? Please, don't just settle for the cheapest premium. Cheap policies are usually cheap for a reason. They're packed with weak coverage, tons of exclusions, and limited endorsements. The lowest price is almost never the best protection. So, the crucial point is this golden rule right here. Insurance only works when the policy perfectly matches your real operations. The sad truth is, most truckers don't even realize they have a mismatch until after a claim happens. And by then, it's game over. The lawsuits have started, the bills are piling up, and it is way too late to fix the paperwork. Which leaves us with this final, really urgent question to think about. Does your current policy reflect your reality on the road right now? Seriously, don't wait for a tragedy to find out. Go review your contracts, double-check your driver list, and make absolutely sure your daily operations match exactly what's written on that paperwork. Knowing your coverage before the unthinkable happens is for sure the single smartest thing you can do for your business. Thanks for hanging out with me for this explainer, and hey, stay safe out there on the road.